Hey folks, Investment IQ here, investing ideas, earnings, picks, and options plays. We got another great looking chart for you coming up here, which is Lowe's Companies Inc. LOW ticker. 8/17/2022. That's Wednesday next week, August 17th, 2022. That's when these guys are reporting. And we're going to be taking a look at Lowe's here, and we're going to look at an options play on this, or ideas for an options play. And stay tuned for another video coming up shortly, which is we're going to take a look at Home Depot, and we're going to compare the two in a video after that. So that should be kind of interesting. But I'll be interested to hear folks' opinions on which one they think is the better play, HD versus Lowe's. So let's dive right in. We've got data going back to 2013, all the way up to May of this year. And if we take a look at the numbers, as a quick reminder for folks, these are called earnings IQ charts. And essentially they are charts that if you had played all of the earnings up until May of this year from 2013, and by play them we mean you'd bought at the close the day before earnings and you'd sold at the close the day after earnings, so that would be the green line. 3 days after earnings, that would be the blue line, and 5 days after earnings, that would be the orange line. So when we take a look at here, you can kind of guess which curve I think is the best. There's the 5, there's the 3, there's the 1. So to me, the 5 day is the clear winner. And the total gain and loss is 55.36%. So that's if you had played every single one of those earnings and you had just stacked up the percentage gain or loss, this is what you'd have over time. So that is not compounded, right? And somebody else pointed out, doesn't this mean that, the actual compounded or even just annualized return is astronomical because you're only trading it even at 5 days, even at 5 days after the close, you're really only trading it 4 times in a year. That's 20 days out of 250 trading days. And the answer is yes, that is true. But I think it's just too easy to get crazy with numbers. And we like to kind of look at this as a series of opportunities for cash flow, or a game that you might be able to play, an opportunity to play options against. And that's what we think this one is. This one looks really good. Let's take a look at the win rate and some of the other metrics here. So 54% for average after 1 day. Average win rate for 3 days is 41%. Average win rate for 5 is 62%. So again, the 62% looks pretty good, combined with the historical equity curve in terms of saying that 62% of the time you were a winner if you had played this on the 5 day, right? And if we look at the gain and loss, you can see 5 days on average nets you quite a bit more than the 1, 3, and the 5. So even though this shows as 0.16%, and I know somebody else had commented in a previous video, I had said, there's not a lot of meat on the bone when there's something like 0.16%, but I think it's important to recognize what that's showing you. The 0.16% is if you averaged out all of the wins and losses across all of the 1 day measures that we have, what you get is that average, right? So it doesn't mean that you only actually, when you win 0.16%. It means when you average the losers and the winners, what is the total, and that is the total average. So, and we are going to actually delve into that at some point later in the future in another video, where we'll kind of show what is an average loss versus what is an average win, and those two together are what you would really need to look at, along with the win rate, to get to this number. But it's important to point that out because I think it can get lost in the weeds if we're not looking closely. So overall, I like the idea here that as you hold it longer, you tend to make more money, and that kind of portends to the idea that there's some follow through right after earnings. Yeah. What else can we look at here? We did want to look at the EPS. So market cap, $121 billion stock. EPS trend, We can kind of see here there is some seasonality here in August, 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 August. Guess what the next one will be? August. And May. So, you know, we're expecting that this next one will be a bump up just like all the other ones have. Keep in mind that doesn't necessarily mean just because the earnings trend is seasonally, this is the peak. You know, you kind of have to do a little bit more analytics, and there isn't necessarily that many data points available to do that. But overall, I think this looks good for a 5-day trade. And I think too, this is the kind of stock when it sets up favorably, these guys probably have some really decent stock volume and options volume. So let's take a quick look at the stock and get some volume metrics. So average of 3.78 million shares traded a day. That is fantastic in terms of volume. It's about a $204 stock at the moment. If we go back and take a look at the options chain, we can kind of see here. So today is August the 12th. These guys don't report until what, the 17th. So if we kind of looked at it and said, well, if they're reporting on the 17th and you're trying to go for a 5-day, you would need to, because the 17th is a Wednesday, you'd essentially need to say Wednesday is the earnings day, and if you take the close 5 days after, that's Wednesday the week after the 24th. So the 26th is what you'd be buying right here. So you can kind of get a feel for, okay, you know, what would this be trading for? And what kind of metrics and stats are here in terms of the open interest and what kind of volume there is. But it's pretty decent option strikes. Now these are weeklies, by the way, so you could go to the monthlies and see if you've got better volume, better open interest, etc. Right? So I actually think there is. I think you'd probably, well, actually for the nearer term ones here. That's kind of weird. Right? It's showing me the 19th and the 26th, even though I said show me the monthlies. In any case, you guys could do some research and try and figure out which one works for you. I mean, I personally don't mind doing the weeklies if the volume and the metrics on it, or if it's got better liquidity, that's what I would really be looking for. But potentially with a move of even only a couple percent on this, you could find yourself with a 20 or 30% winner on hand. So we'll do a breakdown in a later video on that. And stay tuned as well for the Home Depot video coming up soon, and we'll do a comparison of these. But overall, I give this guy a thumbs up. I think a gain of a 1.5% on average is pretty decent over time, and I think the 5-day curve there looks decent enough with a good backdrop like we have at the moment anyways. This looks like one that could be a winner. So let us know what you think, folks. If you like this video, hit the like button. If you've got commentary and you think Lowe's sucks and Home Depot is great, we want to hear it. We want to know why. If you've got options plays or particular strategies that you think would work well on this, let folks know in the commentary below, right? And as always, subscribe. Hit the bell notification button so that you can get notifications when we put new videos out. And as always, we're always looking for feedback. So let us know if you like, don't like. We love it all. We love it all. So thanks for watching, folks.